First thing, we have relative strength here. Just to go over, I wanted to go over some interesting concepts about what we've created and what I use for myself. And we have several under my relative strength page charts. I've created many different pages to give me a look at what the different markets are: gold, crude oil, euro, the yen, the bonds, the Russell, the Dow, the NASDAQ, and of course the S&P 500. So there's a lot of grouping, and the date that I started this back from was the end of August, was around the 1st of September. And as you can see, they've been just melting away at gold. It's just this is a zero line performance. So since the beginning of September, once we started to break, you start to see the changes in assets above the zero line. It's kind of an interesting anomaly that when things get weak and they're below that 0% line, they just kind of remain weak until they get back over the 0% line, which is in the case of bonds, which is the pink line. So once they started to cross over, you started to see a positive performance. The brown is crude oil and gold. Both are very negative, and for just this short time period, for the last, let's call it 6 weeks, right? Crude is for 6 weeks down 5%, gold's down almost 9%. So selling begets selling, buying begets buying. Buyers come into the market, positive action attracts more money. That's kind of like what we've been saying. And the Russell is the one that is still, in this time frame, in the last 6 weeks, outperforming both the S&Ps. It's performing the Dow. It's the small cap, so it looks like they are. That's that orange line, which, interestingly enough, we haven't quite tapped into a new yearly high for the Russell. So the thought process is they're still buying the Russell, and it's outperforming all asset classes. So are we? The reason I bring this up is now the time that the market is starting to get a little head start, because it's October. I mean, believe it or not, it's October. I don't know what happened in September. We were just sitting here in August saying, God, these summer markets stink. And all of a sudden, maybe we're starting to see the January effect, which every year the January effect has been creeping in earlier and earlier. So they are buying small cap stocks, and to me, that's if the market is going to continue to be bullish, small cap is going to kind of continue to outpace the other markets. So you definitely, what that means to you is you want to focus in on small cap stocks as a leadership. And so we're going to be watching that from week to week for those that stick around with us and see where the leadership, what sectors are important. Now, from a global perspective, who's leading what? Since the beginning of the year, the S&P 500 is leading the charge. But believe it or not, France, as indicated by the EWQ, France has actually broke out to new highs for the year. So for foreign markets, France, Germany, actually those markets are outperforming the Dow Jones Industrial Average. But we just got a little uptick here, a new yearly high in Italy. Malaysia hasn't quite taken out its yearly high. Emerging markets, all those people, and when I was in Germany, a lot of the fund managers that I talked to said, what's going to happen? They didn't really care that I was talking about buying Siemens, and they didn't really, it was interesting because it kind of insulted me. Like, what am I doing here? You know, you guys are a bunch of buffoons. I might as well manage money myself, because if you're managing money, you guys are idiots and you all should be fired. Literally, I had to, and I call them kids, and I'm going to rant a little bit, because none of these guys, these kids, they were all like dressed in suits, and they all thought they were impressive, and, you know, everyone in Europe is kind of like a money manager. You know, it's kind of like a title that you give to some corporate exec, and you give him a vice president, and you slap him a $50,000 a year salary, and he thinks he's important, right? So these kids, and I call them kids, kind of like, hey, oh, that's great analysis, you know, blah, blah, blah. Yeah, sure. Industrial's leading the pack. So you're telling us we should be looking at Siemens for our clients. Yeah, sure. You know, Siemens was at like 114. It rallied up to like 124 in the subsequent days that I left Germany. But no one really cared about that. What they wanted to know is, Could you please explain to us about the emerging markets? We've invested in emerging markets for our clients, and at one point we were down 30% for our clients. And I go, and off the record and off to the side, and after I got off stage, I went up to one guy, I go, man, I hope these clients are real good friends of yours, because you guys, once I figured out you guys are idiots, and I said it just like that to him. I said, once I figure out you guys are idiots, because the stock market's up about 18% year to date, and you guys are down 30. So once they get their little calculator out and figure 18 and 30 equals almost 50% swing of equity, they're going to be pretty pissed at you. So all you care about is how your poor investment choice is going to do. Emerging markets, you guys invested in emerging markets. Here's emerging markets. It's Syrian, Egypt, Turkey, India, all the fun countries, right? All the countries. So they thought emerging markets, because here's what some people do. They invest in emerging markets because it's underperforming. So in February and March, we're underneath that zero line. Very, very important for me. And I didn't give them this information, but I'm giving it to you. I'm not going to look at emerging markets again, and I wouldn't suggest anyone to look at emerging markets until we get back, believe it or not, above that zero line. Because, again, you get above that zero line, then you're going to start to see money chase money. Right now, this is dead money. All you're doing is buying a loser, right? And most good stock portfolio managers don't buy relative weakness. They don't pick bottoms. They wait till a trend has turned and they look for a reversal in the marketplace. So the EEM, even though it's cheap, and that's the EEM, and the I think it's EVO is Vanguard's EMVO or EVO. You have to check that. It's Vanguard's emerging markets. I'm going to be watching, and I might give up a little bit of potential profits, because right in here, even though the trend is up, there's better strength and there's better opportunities within these markets here. All right? So I thought it would be kind of important to explain to you, Latin America, I mean, yeah, that's a value, right? That's cheap, but who says it can't remain cheap and just lose less? So I'm not interested in, and that might be a mistake, but I'm not going to be looking at emerging markets until we start crossing back above that zero line on year-to-date performance, and then we'll revisit it in the next few weeks. And that might be a good trade for the EEM. Because once it starts to prove itself, and you get from a losing perspective, because, I mean, we did a thing back, remember the famous rising tides lift all boats, the phrase I couldn't remember, and we were talking about Italy, and Italy was doing poorly, and I said, yeah, but the rest of Europe is doing well, and we saw the France, German, even Malaysia markets, the S&Ps were popping up, and all of a sudden we saw rallies. Now Italy, if you notice here, Italy is now not only positive a year, but it's breaking out, making new highs for the year. So there is a turn going on in Europe, which is fairly interesting. But the trouble still stems in emerging markets. So we do have, between the S&P, France, Germany, Italy, even Malaysia coming into the picture here. So we want to start focusing and remain focused on the global markets to see if that concept rising tides are lifting all boats, right? So with that said, what sectors do we look at for this week? I had you looking at last week the IIX and the technology space. And since the beginning of September, transportation hasn't broken out, made it in a new high, but transportation was the best performer for the month coming into October. As you can see here, the industrials are still catching fire. Consumer discretionary didn't really perform as great as we would have liked. Materials are doing well. If you can see this light blue, it's XLF. It's starting to outperform the KRE. Banks, they're starting to outperform the healthcare. The overall market is black, S&Ps. And down here, the maroon is energy, blue is technology. Now, technology, as represented by the XLK, and one of the things we've talked many, many times is XLK is a diversified financial ETF. It has what? The insurers, it has the banks, it's got the CME in it, it's got American Express. It's not a pure bank play. That's why I use the KRE. For regional banks, I could use the KIE, and we do different sectors. Part of what I like to see when I do the sector analysis from time to time with you guys, or look at the relative strength, to see if I'm on track, to see if there is a positive upturn in the sector I'm looking at. Now, last week we talked about going in. Last week I talked a bunch of stuff, both on videos for national futures and for the planning and scanning. And so I just wanted to shore up and summarize here the importance of looking at the relative strengths for me is to say, gee, is the rest of the markets kind of doing well, and how's the S&P compared with other markets, right? And more importantly, how are the other sectors doing? Are they all turning up? Because if some sectors are weakening, and it's nice to follow, because you may have missed this in looking at the transportation sector, if you make something, and if there's an order for it, you got to put it on a rail, a freight, you got to put it on a plane, you got to put it on a truck. Somehow it has to be transported to the consumer, right, to the outlet, distribution centers, right? So it goes from, if it's made in China, if it's reassembled here, whatever, parts, stuff has to be moving. And the transportation sector, that's part of the whole concept that we got to look for, you know, improvement in, and we have improvement in the transportation sector. When it comes to looking at the foreign markets, I want to make sure that, you know, we've got leadership, because if we are still clinging on to the leadership in the marketplace, then guess what? Then it tells me not to get too damn bearish in the marketplace. Like I think we have concerns, but it tells me we don't want to get too darn bearish in the market. So let's go over here and look at the index AD lines. And there's a couple other things that I like to look at, you know, overbought, oversold. Actually, let me go back over here. I keep missing to share this because we don't have a lot of time. I think this week we want to do a quick review. All right, so looking at the S&Ps, the difference between the spiders and the diamonds, all right? So we've had that struggle where the Dow Jones Industrial Average has been lagging the markets like for the last few months. And so if the market is truly going to continue up, and if you take a look at this chart down here, both the diamonds and the S&Ps are actually moving in sync, right? But the difference is that the differential back here, as you can see, they were very correlated on top of each other, right? As you can see, black on red, it's pretty much correlated. And now all of a sudden, you start to see a space, that widening, and that's that spread differential here. We've really gotten a wallop on the S&Ps, outperforming percentage-wise relative to the diamonds. So when we got last week, McClellan oscillator got near, I mean, it didn't even get near it's these crazy oversold levels that we've been seeing. You know, it just didn't quite get down to that level. It was spooky because we thought possibly we could, and we talked about if the market had closed below the prior week's low, we would have gotten a weekly low close doji. We didn't do it. We came close to the monthly pivot supports in like every single market, and then big turnaround straight to the upside. McClellan oscillator is now getting close to, I mean, we still got its traditional highs where you start to see a little bit overbought. And what's really hard for traders is we get these overnight moves based on what our government is and is not doing. And overall, all we're seeing is that if the market was so scared of our government, if the stock market was so scared of our government, we wouldn't be seeing these, what I call the sector rotational change in the marketplace. That seems to be the theme for the last 6 months, is that we've been looking at a sector rotational correction within the market. It's like the money doesn't really leave, it just goes from one sector to another. So let me go over here. I wanted to show you this too, and then we'll get into our scanning and planning and share with what stocks look good, what sectors are still looking good. All right, so on the S&Ps, you know, we came, like, if you take a look, almost every single market layout last week. I mean, the NASDAQ hit the monthly pivot support. We came close for all the other indices, and we thought we were going to go from potential weekly low-close dojis to daily high-close dojis, which we did tweet out. We said, hey, we got potential high-close dojis happening. And, of course, on Thursday, the market just, you know, completely ripped straight through, generating PPS buy signals and high-close doji in almost every single market. And we had a little bit of follow-through, amazing follow-through on Friday. So the Dow on a daily basis crosses over its advanced decline moving average. It happened over here with the NYSE. It happened on the Russell. It happened on the NASDAQ. It happened on the S&Ps. And I want you to focus in on the weekly. On the weekly, we've just been kind of, as the market's been chewing everybody up, it's just been flatlined on the weekly. We never had a negative crossover. We thought we'd come close to it. In fact, even in the S&Ps, we didn't even get near our that's our quarterly pivot, by the way, as you can see here. We came close, but not close enough to the monthly support on the S&Ps. So for me, I'm kind of looking at this, and I'm still cautious because, you know, I'm very concerned about the way the market's been trading. In fact, for a lot of the stock positions we talk about in the trading room, to trade light. We've been making some stock selections with PA Stock Alerts. We've been doing what? Trading half positions, looking to buy lower levels. I mean, when you come into a day where you might be, you know, falling off the face of the earth, you don't add to a position. You kind of scale back and look to see what's happening. And all of a sudden, market just zings straight back up. So it's been kind of a, I mean, it's been a cautious market. You should be trading cautiously, but I think once this thing resolves itself, the technicals are absolutely telling me right now, when I look at these technicals, that everything's kind of like, it's just consolidating. And believe it or not, I don't know if I'm talking myself, and I probably shouldn't even be talking to you about this, but I'm thinking this market's getting ready for another leg higher. Another leg higher. What's another leg to me? Another leg higher. Another leg higher. I mean, the question begs, how much higher could we go? Another leg higher. So I'll discuss that, because I think it's important that we need to kind of address that. On a monthly basis, we've been sitting here in the decade. I mean, it's been over a decade. From that peak high to this peak high to right in here has not been a decade, right? From 2000, if you think about it, we've gone 13, we're almost heading into 14 years. So when the peak was made in March of 2000, if you think how many months away is March? So you got the rest of October, November, December, January, February, March. You got 5 months. In 5 months, it's going to be 14 years have gone by. And so another leg higher. Here's the thing. We broke out, and this is what we have to start really thinking about longer term, friends, is we broke out of these highs. And yes, I know I've been looking for gaps to get filled way down here at 1422, which are way down here, the yearly opening gap somewhere down in here. I'm not sure when those are going to get filled. But what I'm starting to look at is on a monthly basis, we've broken out with on-balance volume. We've started to break out with the advanced decline. When I say another leg higher, I mean, could we see 1800 first? Could we see 1799 or higher? And so another leg higher would be a measurement of maybe this consolidation, this choppiness that we see, could be an acceleration to the upside. So are there stocks in this dead 10-year period, a 10-year, 14-year period that stocks just haven't moved? If you think about it, what's really happened? real estate's come to boom and then bust. We've got, I guess you could say the same for our government right now. But overall, I think the theme is that there's still a lot of names that are cheap there. Natural gas sector hasn't moved. Steel hasn't moved. Raw materials haven't moved per se. And I'm thinking that a lot of the stocks, when we go into planning and scanning, technology, you know, I talked about last week, here's one that hasn't really done a whole lot through the ages. And when I say the ages, let me go to a quarterly chart. I mean, talk about dead money, right? I mean, think about it. These are all splits, too. So after splits, it really, I mean, we haven't done anything for 10 years in Microsoft. Talk about dead money, right? But who's to say that if this thing doesn't start to move up and you have a breakout, is there potential for Microsoft? Is it dead, really? What if they come up with the next best innovation? They're still in business, right? So we, the funny thing is, when I was in Germany, and this is what I was going to mention to you, I kind of had the same conversation with people in Germany. Siemens. Siemens, if you bought this thing for the last 2 years, you're just doing, you wasted your money. When I was over there, I said, you know, I'm giving you the same kind of analysis I gave them. And I said, listen, you're starting to break out. You're in buy signal, and there's some volume accumulation. And so, you know, excuse me, good analysis. That's okay. What do we do with our losing position in emerging markets? How do you recoup that? It's like, how you recoup that is you dump your loser and you start investing and you start over. But that's how you answer that question. The key is that we have to be focused and be ready. The markets move when you least expect them, right? And, you know, we've been talking about the long side of some seasonal trades. I don't think we told anyone in this room, I don't want to toot my horn too loudly, but I don't think we told anyone in this room to get short. We were talking about looking at seasonally strong sectors, stocks that should move and give you an opportunity on a decline. So we talked about a few, one of the things that last week's was definitely, we talked about looking at, I know I showed you a chart on Aruba, A-R-U-N, Aruba Networks. We talked about Netgear. There was a lot of different areas in the marketplace that had low risk opportunities, right? Excuse me, I do have, and I'm not sure if it came from the little ones, but we definitely pulled up a cold somewhere. So other stocks, Microsoft, we just mentioned. Looking at a lot of the names in that field, even though we're not seeing that sector lead from a relative strength perspective, as I showed earlier, it's still in the hunt. And I think what the key is that the internet sector and that whole space. So let's take a look at Netgear real quick. All right. This seasonal trend, as we start to break out, if this thing starts to break out, right, if the overall market is going to go up, it's going to go up from leadership of maybe new companies, leaderships of rebuilding, leadership from new sectors, right, and then new money coming into the market. So you have Netgear. We have Microsoft. This to me, and I think I mentioned this to you guys last week, this to me just looks like one whale of a potential bull flag. I don't know about you guys, but you know, I just think that this thing is got some serious potential, and if this is a bull flag, right, then we are talking on a measurement technique that takes you over 40 bucks. So if you measure from the flagpole, see if this looks like a flag forming, right? So here's your flag formation. If you start to break out this consolidation, right, you start to break out to the upside, your first objective is going to be around 40, 41, somewhere up in here. Is that conceivable? Is it possible? Has it been there before? These are the questions we ask ourselves. So on a weekly basis, we're still in a buy mode, and when we take a look at a monthly bar, I mean, wow, this is kind of something that's escaping everyone's attention. That trend is from left to right. It's making higher highs. It's making higher lows. And when you take a look at a potential for the market, if it does break out to 40 area, it might not stop at 40. The first test of resistance will be the high in '07, which was around 37. This was the first test. If it blows, it breaks out of there, I think there's a lot of air up here. There's a lot of air up here for resistance. So Microsoft was one. You got to admit, I mean, give me some feedback. I don't listen to the news lately because it's depressing and it would distract me. And I think I'm more focused with the markets this way. I mean, I do read that, the government's fighting still and all that good stuff. I guess that's the best way to say it, both sides. But I don't think IBM or Microsoft, and that was the next one I want to talk about, are in the news. So with IBM, this is a stock that as well, it's in a monthly sell signal. It had that big breakout. This is what I wanted to share with you guys. It had that big breakout, and it just kept going. Microsoft hasn't done that yet. So I would have to say, let's not lose faith. This planning and scanning, we might even have the wrong strategy. I know we tweeted out, we talked about credit put spreads last week in Microsoft, and I would have to say this particular week, let's focus in on, that same space. So when I take a look at, what's the other one I wanted to bring up? NVDA, all right? NVIDIA makes, I mean, here's one that, it's had some, I mean, it had a couple splits early on. It's had some splits. It's got earnings coming out. It's in a buy mode. I mean, it really hasn't gone anywhere. It's dead money. But I mean, if people decide that if they come in with the next round of revolution, and this has a lot of air to the upside as well. So believe me, instead of staring at the same culprits, the same thing that are in the news, your LinkedIn's, your Teslas, your Priceline, your Chipotle Mexican Grill. Meanwhile, this planning and scanning where we say, hey, there's a sector that's starting to come alive here. We just got to make sure that if it is coming alive, are we starting to see volume creep in? Now, NVIDIA wouldn't pique my interest quite yet, and it starts to enter more towards the end of the month, a seasonally strong period of time. I'm going to keep my eye on it. It's in the volume levels here, as you can see, NVIDIA. It just isn't coming into play for me. So I want to see a rise, and I want to see more volume coming into the game. When we took a look at MSFT, we talked about it last week. Folks, what's the difference? There was volume coming into the game, right? And look what happened. The market went up. So we had an objective of 33.30, and then to look for some buying opportunities. And, man, on an intraday basis, you got them. You couldn't even get this stuff down to pivot support. We weren't really looking for, the 29. We were talking about that 33. So I was off a little bit. I was off by 50 cents because on an intraday basis, we just went just slightly underneath there. So, and then look what happened. It just broke out. So, again, I think that planning and scanning is kind of vital still. This particular week, I want to still focus in on those names. I wouldn't. I think maybe perhaps I underestimated the power of this market, and I underestimated perhaps the power of this sector. Okay, so I hate talking up a position. I hate talking up, and getting myself really revved up. But I have to look at the facts. And if everyone is so bearish this market still, and I mean everyone's bearish. Last week I had an opportunity to meet with Tom Sosnoff. Tom and I sat down. He's moving his offices, Tasty Trade, and it was great to see Tom and Tony, Dak Batista, and Tommy Preston. I don't know if you guys remember the early days of Thinkorswim, Tom Preston, TP. Preston was in town, so we had a bunch of laughs, man. I mean, you get three marketeers like that around, it's going to be your. There was some. My wife was sitting in the room embarrassed about me, and all of a sudden we were just cracking up, and she didn't know what was going on. We were just talking. It was like talking Greek. Poor Mary. It was funnier than the Dickens, though. But the amount of the difference about the only similarities right now Tom and I have about markets is that we both have hair on our heads. Other than that, Tom's more in tuned with looking at statistical option matrix like implied volatility, looking at stocks at 52-week lows, 52-week highs, and I said, man, I told him, I said, listen, man, there's a whole bunch of sectors, and I give Tom stuff from time to time, and say, hey, you want to keep your eyes focused there, or take a look at this sector or this stock and things like that off the cuff. So in any event, the thing is that with this market, even he was saying, yeah, and I said, just a casual observation, we went into Whole Foods, and I saw this brand new sign at Whole Foods, free Wi-Fi. So all these stores are, and everywhere you go around, everyone wants you to come in and have an experience with them and bond with them. And what do they offer you? Free Wi-Fi. And as every store starts to offer free Wi-Fi, everyone's going to need to put in those little Netgear boxes, or they're going to need to put in some type of a wireless system. And they're going to need to increase broadband speed, and they're going to, and so the whole thing's growing on a global scale. So I do see I do see still improvement in the housing market. A stock that we had that didn't treat me well, but we quickly got out of it, was D.H. Horton. D.H. Horton, to be honest with you, Lennar, this whole sector, it's still kind of got a shot to the upside. It's really weird. It never got out of the buy mode. And from a seasonal perspective, right now we start looking at buy signals in this market. So, I mean, can the housing market turn around? Here we have a high closed doji, which is hard to see, but after a downtrend, you got a high closed doji, the market came near monthly support. D.H. Horton might be worth getting a look at. If D.H. Horton came in with a buy signal, notice how our JP stocks, the high closed doji scanners, picked up Lennar as well. So I've got, out of 13 symbols for this week, I've got 2 of them are stocks that are in the same space. They're competitors, Horton and Lennar. And one of the things that really strikes me with Lennar is, folks, look at the volume pickup with Lennar. And I think this might be a good stock replacement opportunity and a buying recommendation that I would put out, because the weekly on this stock, now got to be careful with stops, because look at what this market did. I mean, we went from 35 straight down to 32, and that'll kind of give anybody that'll put a crimp in your style, so to speak. But we do enter in a seasonally strong period of time for the builders. There is some builders going on, which is pretty weird. So when you take a look at Lennar, let's take a look at Toll Brothers. I don't think Toll is as pretty. It's more high end, but it did hit its monthly pivot support. Boy, if you got a resurgent in an upswing in the home building sector, and Toll Brother doesn't have the same seasonal makeup. It actually turns around towards the end of November, unlike the other ones. Let's take a look at Pulte Homes. PHM is Pulte Home Group, another one in that space. And it pops, just like, unlike Toll, just like the other Lennar and DHI, you have a seasonal turn that comes towards the end of October. So I want to see if there is, even though we did not get a potential high close doji, it has almost the same formation. We didn't get the daily volume behind it. I would look for this space for this week. I'd pay attention for breakouts on this market and scan for pops, the daily buy signal. If the market's up today, you'll probably get one, because typically the high close doji gives you at least 1 or 2 bars earlier. I would say for DHI, I think it's such low risk. It depends on your, where you stand for the year as far as trading up or down. This one, because at at this point in time, I would say if this week you do get some type of a buy signal, I would go for the buy signal. I want to see a daily buy signal, and I want to see an upswing in on-balance volume. So we're going to have to scan. You're going to have to do your due diligence and watch that as well on DHI. But Lennar, LEN in that space, man, that weekly on-balance volume, that tells me someone's buying this stuff. And that's not small speculators. That's not a small little fund. That is some pension fund money there. They're buying into this. This is insider buying. That's a huge pop in volume. If that volume chart looked like the price chart, we'd be at $48, right? I mean, so take a look at this. You see what I'm showing you? We had a higher move in volume in accumulation down in here than you did when prices were up there. That is generally a precursor that will lead to higher prices. So you guys want to focus in. Lennar is now a shot to look to get in. Even the on-balance volume on a daily basis looks pretty sweet, and it did form a high close doji. So, there are some stocks out there that I think are still good. Stick with last week's trades. I think they're still viable for this week on pullbacks. And let's focus in on the home sector still. As you can see, these two stocks, Lennar and DHI, both enter in a seasonally strong period of time right now. But Lennar is my favorite because of the fact you have huge volume breakout. So that will conclude today's planning and scanning. And just, the purpose for planning and scanning is to say, gee, what does the market condition look like? What stocks, what sectors are we looking at? And help you guys really start to manage, the markets in your trades according to what the technicals show. I can't believe this. We're going to be on a busy road show. And, I mean, if you're like me looking at the commodities, and a lot of people, we're all just kind of, the commodity markets, I could go on a rant. And I've said it many times. You can't even trade gold options, so why bother? Last week in the bottom line commodity report, if you go look at the video, it's still up. I said, listen, if gold breaks 1305, we should see maybe a decline to test that 70 area again, the downside. Well, we got the gold debacle, and no one likes it because it caused a big ruckus on Friday, right? The exchange had to have the 10-second rule, blah, blah, blah. So seasonally, why is this a surprise to any of you guys? It shouldn't be, because we talk about the seasonal weak period of time. It's the worst time of the year to buy gold. But yeah, when the gold goes down, they're crying for investigations. Really? Okay, so why? Because some fund was long and they're pouty? I want an investigation. Turn those machines back on. The market shouldn't have gone down that far that fast. Well, take it like a man, chump. We speculators have to deal with the institutions throwing crap our way and the government holding us hostage every single day. So, deal with it. I think if we stay the course, it's going to be a great year, great quarter ahead of us, and I certainly so far like the way some of these markets have responded. I think if you're like me as well, I've found a lot of viable stock trades this year. Real big swings, and stock trades out there that are kind of like, options premiums. Some of the stocks that we looked at, we talked about was JCPenney, and I think that, we got a great theme going. And any of the stocks that are getting sold off towards the end of the year are being sold off because of what? Tax credit purposes. And any stock that's just soaring straight up, no one's going to want to take a tax liability. So we've got some good stuff that we're going to start to build a checklist with you guys towards the end of the year. So keep that in mind. With that said, I know I went way over today, and but man, I tell you what, I think it was kind of neat to go through the planning and scanning, looking at, just to be fair, I want to show you on the scans my the low close doji, and you pretty much got two companies. So these two companies, you want to talk about ADT, Security and Alarm Systems. I mean, they're at the bottom of the barrel. There's one that you may want to write that down on your list of stocks. It's at the low end, okay? It's at the low end of the year. Who wants to be the hero and buy this right now? You probably, if you bought this thing, you want to dump this thing and take a tax credit. ADT is in the S&P 500, so that's one that does meet the criteria. The other is Mosaic. Mosaic's not at the low end of its 52. It's closer to its 52-week lows than it is its high. So we want to kind of watch Mosaic. That's another one as well. Potash, that whole space, POT. And it looks the same because it's the same type of company. They deal with the fertilizer. So anyway, I'm more interested in looking at those stocks that are near their below, and we will share that with you, that are JP below the 50-day moving average. And man, we still got a bunch of them. All right, in the overall market, I got to change that scan criteria to just S&P 500, but there are a bunch of them. Even the coal sector, Arch Coal, ACI. I like looking at Arch Coal because I think next year Arch Coal starts to bottom out in November. We've got, I want it to be down. I want that to be under everyone's radar. I don't want anyone to be looking at Arch Coal still. Okay. I talked about this stock a while ago, AK Steel. I know you guys heard me talk about it, and AK Steel, it's in a seasonally strong period of time, and there is good volume moving. So that is a stock that's under $5. It's under everyone's radar. It generated a daily buy signal on Friday. This too also has that little consolidation formation that might take you up to a minimum objective of about that $5 level. So from this high, from that low to this high, if this is consolidation and you get a confirmed breakout, you get some volume on a daily basis behind it, there's no doubt that this stock cannot hit $5 as it goes into its, for the next 6 months as we head into April. So I kind of like AK Steel. Once the government gets back and we start assigning some contracts and you start to see some steel increasing, you're in a monthly buy. You had a high close doji, AK Steel, I mentioned in this room before, but that's a sleeper. It ain't going to get you rich quick. It's a sleeper. It's also a $4 stock. It's like an option. It's like option premium. All right. There are values out there. There are deals out there. Stick with us here, and we'll help you formulate a plan. Everyone, thank you all very much, and we're going to stop the recording here. It was long, but it was important, so I hope you guys, for those that are here live with me, thank you very much, and for those that will see it on a recording, I hope I really have the same message as last week. I think stick with the IIX and the stocks in that technology space. I still like, the names that we mentioned in last week's recording. So with that said, everyone, have a great trading week. Thank you.